Hey guys, what's going on? This is Kyle and Adam from ProjectionHub. We are back with another video here where we've got a scenario that we've pulled off of Reddit of an individual that's kind of discussing this thing in the SBA world where people call like a deal SBA pre-qualified. So people that are, shopping for an SBA acquisition, and you know far more about this. So if you want to give some breakdown, I guess, when you're kind of giving us your advice on like where you see this and who's actually saying SBA pre-qualified. But essentially the post is just trying to break down like, what does that actually mean? Because some people I think throw around pre-qualified maybe a little too liberally. That might have some more or less weight to it than people would expect. So let me just kind of go through this post and then we'll get your take on it. So this individual said the listing says it's SBA pre-qualified. So I'm assuming they're working with a broker. Maybe you saw a listing online or something and it said it's SBA pre-qualified. It says, but for who exactly? I screen a lot of listings, and one listing this month took it further, suggesting down payment, a working capital line, even a broker stated first year cash flow after debt service, all laid out like the financing is done and just needs someone to show up and sign with a signature. But when I tried to define what that stamp actually means, I couldn't. As far as I can tell, pre-qualified means a lender looked at the seller's numbers at some point and didn't hate them. It says nothing about the structure, my injection, my experience, or the terms I would actually get. So it doesn't really take into consideration the buyer itself. The lender who pre-qualified it isn't necessarily the lender I would end up using. What I can't figure out is who did the underwriting behind the sticker, how deep does it go, recasted tax returns or just the broker's own recast, whether the pre-approval survives any change to the structure like adding a seller's note or more working capital, whether the quoted down payment assumes best case buyer profile instead of like an average person, and why, if financing was generally lined up, isn't that priced and even harder than it already is. So yeah, basically question is stated there in the heading though, and some of the things they just outlined right there. Give us the quick 2 cents on like, where do you actually see SBA pre-qualified? Like who's using that? And then you can do your best to try to answer some of the questions outlined here.
Yeah, so it is pretty common for a business broker will often work with different SBA lenders. And so they'll have kind of their standard SBA lenders that they go to, and they'll say, hey, I've got this listing. Can you take a look at it? Take a look at the financials. And are you willing to write a SBA pre-qualified letter, for the deal because it sounds more appealing to a buyer, right? I don't think that it means nothing. Probably it means something. So like what they outlined here, what exactly does it mean? Again, that's going to really depend completely on the lender who put that in writing. There's no requirement by anybody it could have been they looked at one set of financials that was, just for 1 year revenue profit and said, sure, it could be that, or it could be, hey, they looked at all 3 years of tax returns and they did a detailed analysis. Anything in between, I think, is possible there. I would say if the pre-qualification assumed a certain down payment, then like this question about whether the pre-approval survives any change to the structure, like adding a seller note or more working capital, probably what the lender did was assume some sort of amount of working capital. They probably assumed some amount of down payment. And then based on that, they calculated a debt service coverage ratio or a cash flow available for debt service. And they're gonna, if you end up asking for more working capital or you want to put down less down payment, it is going to change that calculation. So it may not be pre-qualified anymore. And I guess the other thing I would say is like pre-qualified is the lender is trying to provide some value to say this business it's pre-qualified for something, but you're right that the buyer is important. So does the buyer have industry experience? If they have absolutely no experience, like they've got to mitigate that somehow. And then it's going to depend on what the buyer has in terms of cash or savings, rainy day fund. So they need to have, probably at least a 10% down payment. Plus I usually say another 10% as a rainy day fund. If that's not you, then it's probably not pre-qualified for you necessarily. Hey, real quick interruption, just to remind you that I offer a free SBA review. As a longtime SBA lender and financial projection expert, I've seen thousands and thousands of loan applications. So I'll give you honest feedback and advice on your odds of getting approved for an SBA loan before you even apply, and try to point you in the right direction based on your specific deal. We'll put a link in the description of the video below to that free SBA review form so you can fill that out. All right, back to the video.
Right. I have a comment and a question. So my comment is, and this again, more of an amateur opinion coming from me, but I think the biggest downside in SBA pre-qualified is honestly usually how it harms the buyers themselves, because I think we will see a lot of people who are like, oh, I'm already SBA pre-qualified, or the business is already SBA pre-qualified. Like, I think that they take a lot of stock in that. And I think they take that very literally, probably more than it's actually worth to the lender at the end of the day. So I do think like we help people be SBA pre-qualified too. And it's exactly what you just said. It's the fact that like we're kind of doing an analysis of the deal, except when we're doing it, we have the buyer there too, right? So, this isn't my sales pitch. It's just saying we're not taking the business as it stands and necessarily pre-qualifying it. Usually we have the buyer as well. And we say like, hey, this whole picture probably works for a lender. And that's kind of what we mean by SBA pre-qualified. It's not like a real certification, but I think sometimes we will come into contact with someone who's already found a business, whether via a broker or whatever, and that has that sticker slapped on it. And they just it almost acts like it's a done deal, right? Like you just plug and play the right owner or the buyer. I was the one lucky enough to get there first. So like, it's good to go. We're not going to run into any road bumps. And I think it's just inevitable when they actually get into the due diligence and the application and all that stuff. It's like there are going to be things that cause slowdowns in the process or questions or issues that the lender has. So if you're a buyer out there and you're watching this, I would say it's totally okay to put some value in an SBA pre-qualified business, but know that that's not any indication that like it's a guarantee that you're going to get approved for it. Like there's just stuff that's going to have to play out in that process. And my question for you would be, SBA pre-qualified is something that probably is most commonly thrown around in that like broker kind of analysis preparation standpoint. Do you know lenders? Are you working with lenders who also use that pre-qualified terminology? Or like, is that an actual thing that they're certifying deals for? Or are they just kind of playing along because they want to work on the deals that, look good on the surface from someone else?
Yeah, I mean, there are definitely reputable lenders that will review a deal, review financials, and put together a letter that says it's pre-qualified for some amount. I think one thing that to be aware of, though, that I see is a lender's going to probably, not every pre-qualification letter will like have an interest rate on it necessarily, but sometimes I have seen that where they like have the term and the interest rate because they want to be able to calculate the loan payment and debt service coverage ratio. So they have to assume some interest rate. So what they're probably going to assume is the high end of the range because they don't have the buyer in mind. They don't know if the buyer is strong. They don't know if the buyer has an 800 credit score. They don't know if they have tremendous experience. They don't know if they have a ton of liquidity and collateral and all this stuff, right? So if you're a strong buyer, you probably almost certainly don't want to just accept whatever that pre-qualification letter says because you probably could get a better deal elsewhere. And the path of least resistance, I think the lender is probably hoping like, hey, you see this pre-qualification letter, you're happy with it because you don't know to ask anything else or try to find another lender, and you think this lender's already looked at the deal. That feels like the easiest thing to do. And so you just move along, but you might be costing yourself, 2% on the interest rate if you're a strong buyer. So I'd just be aware of that.
Yeah, I do think from my perspective, the takeaway should be it's just kind of like a buyer's beware type thing. I think where you're seeing it, especially if you're seeing on listings or things like that, is they're probably assuming pre-qualified with a great buyer, a strong buyer. And there are a lot of businesses out there that are pre-qualified or are like buyable with a strong buyer. That changes the math quite a bit. If you're a very strong buyer, and the deal size, if you're getting like the deal's getting pretty big, multiple millions of dollars. We've talked about this in previous videos. You've kind of educated me in that like the strength of the buyer starts to decrease the bigger and the better the business is. But a lot of your typical small business acquisitions, a very strong buyer like tips the scale quite a bit. So I would say when you see SBA pre-qualified, just like don't get an outsized assumption that like it's a slam dunk because, it's been pre-qualified. Like you're going to be put under a microscope. Make sure you're the actual right fit for that business. There's just a lot of things that go into that. Cool. Mentioned this already. If you're out there and you're weighing an opportunity, looking at a business, shopping for a business, and are looking for some expert advice, we'd be happy to give you some feedback, whether that's on a specific deal or just kind of your scenario based upon your personal situation plus the type of business you have in mind. We can give you an idea of SBA approval odds and what that process could look like for you. So we offer a free SBA expert review. Should be linked down below the video. You can check that out or reach out to us directly at support@projectionhub.com if you just want to ask a question. So thanks for joining us. We'll see you in the next video.
Thanks.